So which is the better long-term investment? The SPY, which is the S&P 500, the 500 biggest public companies, or the QQQ, which is the Nasdaq 100, which is the largest by market cap stocks in the Nasdaq, excluding the financials. Well, color me surprised. For years, many years, I guess I followed other people's opinions, and I wrongly assumed that the SPY is a superior investment. What I had heard and anecdotally felt like I knew was that the QQQ outperformed the SPY by just a little bit, but it was much more volatile and drew down much more severely in the drawdowns. So my thought process was that since I have a handful of individual stocks at all times, that's where my volatility is going to come from. And I want something really stable, a long-term investment that I could sleep well with at night, which I assume was the SPY. But let's take a look at the charts and do some measurements. And I can't make any other conclusion than that the Qs are the superior investment by far. So let's take a look at that. In this video, we'll look at the long-term performance, and then let's measure some of those drawdowns. Are the Qs drawing down much more than the S&P 500 in 2022 and during the... All right, I just got interrupted. The dog was squeaking its squeaky toy. So where were we? Let's look at the long-term performance of the SPY and the QQQ. Let's measure those drawdowns. The COVID drawdown 2020, the diamond hands crash 2022, the bank meltdown 2008, the dot-com crash 2000. Let's look at those and see whether I was correct in thinking that the Qs came down much harder. Before we do, three things. Number one, this is not investment advice, just my opinion. You need to trade at your own risk. Number two, I encourage you to check out my Patreon service. There's a 7-day free trial. I show my portfolio and focus list every weekend. Link in the description. And please check out my partner, Seeking Alpha Premium and Alpha Picks, also in the description. Let's look now at the 20-year performance of the SPY versus QQQ. This is going to blow you away. I think the word would be shocked. Okay, now let's compare the SPY's performance with the Q's long-term using Market Surge. So what you do is you go to this little box with the four rectangles, I suppose. Click on it. Let's blow it up for you guys. And there, since this page had the SPY on it, it automatically pulls up the SPY. And let's now add the Qs, QQQ. So the 1-year performance, the Qs are outperforming the SPY just a little bit here. But I don't want to look at the 1-year performance. I want to look at a 20-year performance. So let's change the date to 6203. Click on it and look at this. I knew that the Qs outperformed the SPY by a little bit, but the SPY went up 441% in 20 years. The QQQ went up 1,413%. 1,413 versus 441. So QQQ went up 3 times, more than 3 times as much as the SPY. Based upon that alone, I am tempted to now say that the Q is by far, QQQ, triple Q, is by far the better long-term ETF. But let's measure the drawdowns too. I have always thought that because the S&P 500 is much more diversified, whereas the Nasdaq is the QQQ is very tech-heavy, I had always anecdotally felt that the Qs draw down much harder during pullbacks. Is that true? Let's attempt to do some measurements and see. It really will need to draw down much more significantly for me to change my mind about only investing in the SPY. as far as, you know, a long-term ETF is concerned. Okay, here's a 3-year chart of the SPY showing the 2022 crash. So let's just measure this from a high of gotta be really careful here, 463.80 down to whatever that was in October. That looks like about 27%, negative 27%. And if I'm using stockcharts.com here, and the measuring tool is, as long as you have the inspect button clicked, all you need to do is left click down and you'll get that measurement. Now let's look at the Qs. 3-year chart of the Qs, high right here of about 401, down again to October, gives us about 38%. So in 2022, it was a market difference. The Qs went down negative 38%. The SPY only went down 27%. Let's measure COVID. Okay, here is the COVID crash in the SPY. Let's very carefully measure from high of 317.41 down here to, what was that, March 24th? Looks like about negative 35. Negative 35. So the SPY went down, let's call it negative 35 during the COVID crash. So what did the Qs do during the COVID crash? Widen this out to 5 years. Okay. During the COVID crash, the Qs went down to, the Qs only went down about 31%. So really surprisingly, the Qs went down less than the S&P 500. I guess the tech stocks weren't so hampered by supply constraints and so forth. I don't know. I don't have a great answer for you. But that is really surprising to me. Let's look at the 2008 crash, back the banking meltdown, the banking crisis. Guess we're going to do a 20-year chart here. All right, let's just do this one, and we will call it good. So 20-year, back in 2008, let's look at the SPY. Here's our high right about there, October 11th. Came down about, now these are just estimates here. We're getting ballpark figures, about negative 56. Wow, that was pretty brutal, wasn't it? 2008. And the Qs, let's measure 2008. Right about here in, actually peaked in 2007 in the Nasdaq, right about there, November 5th or so, down to the end of 2008. It's about 55. Virtually identical. Okay, here's this, wow, hold on a sec. Okay, so here's my very basic chart here. And these numbers are measurements, just using my measurement tool. That's not the exact figures, but hey, that's good enough. Good enough for me anyway. 2022, definitely the Qs came in a lot harder than the SPY, negative 38 versus negative 27. But in 2020, during COVID, the Qs actually came down less than the SPY, negative 31 versus negative 35. And in 2008 banking crisis, oops, I have these flipped. But in any case, virtually identical. The Qs 55-ish, the SPY 56-ish. Now, I know that in the dot-com crash, the SPY came down quite a bit harder. that's over 20 years ago, and things were different then, right? You had all those companies in the Nasdaq with zero earnings, things that just had .com at the end. I don't think that crash is relevant to the Nasdaq 100 today. I think the Nasdaq 100 today has much higher quality companies than they did back in 1999, 2000. So let's go back to that comparison, and I'll make my final thought. So my final thought is that the Qs outperform the SPY dramatically, and the drawdown was more in 2022, but not significant in 2008 or in 2020. Therefore, I think that as far as a long-term vehicle, I think the Qs are superior. And looking at the next 10 years with AI, with robotics, it seems like the Qs are going to continue to outperform markedly. Now, I have a large position in the SPY that I've been adding to periodically over the years. I'm not going to liquidate that. I still like the diversity that it gives me, but I'm going to pause accumulating the SPY, and for the foreseeable future, I'm going to buy periodically buy shares in the Qs as my long-term stable, in quotation marks, ETF investment. So I'm not giving investment advice, but I think if you don't have a position in anything, I would dollar cost average into the QQQ first over a series of months and years, and then potentially add some shares in the SPY. And if you don't own any shares in the QQQ and only own the SPY, I absolutely, like myself, I am going to widen out into the QQQ, and I might even trim some of my SPY shares. Okay, well, those are my rambling thoughts. I really was surprised and kind of disappointed in myself that I didn't do these measurements years ago. Just goes to show you should never just trust what people tell you or trust what you think is going on. You need to look at the evidence. Let me know your thoughts and opinions below. Check out my Patreon and Partners Seeking Alpha if you want to. Links in the description, and I'll see you in the next video.